This week on The Forge, we're going to have a look at Australian corporate tax reform. Now, the Australian corporate tax rate at 30% is surprisingly high, so we're going to have a look at other countries and make a comparison, asking ourselves, well, what would be a fair rate to pay? We're also going to have a look at the way that large multinational companies such as Apple and Google have been accused of using interjurisdictional rules to avoid paying their corporate tax burden. Then we're going to ask ourselves, well, look, if it's not big business that's paying for the tax burden in Australia, then which taxpayers are left to pick up the tab? So the Australian corporate tax rate remains at 30%, and you've mentioned that that's quite high. Now, 30% seems quite low compared to our top marginal tax rates, which are, increasing. Indeed, the increase in Medicare levy and the increase in superannuation as well. Employers look at that as an effective cost of employment in Australia. What's a fair rate? What's the going rate internationally?
Look, internationally, most corporate tax rates now are in the 20s.
Really?
So somewhere between.
It's quite low.
Yeah, 20 to 25% is fairly typical. So we are higher than that. I mean, we're currently at 30. There's a proposal to take it down to 28.5.
Yes.
The business lobby is really quite proactively pushing the argument that corporate taxes need to fall still further.
Yep.
They want us to be, that catchphrase, internationally competitive.
Yes.
The question, I guess, is whether we actually ever can be internationally competitive when the people that we're potentially competing with are the countries like Ireland, which has a 12% corporate tax rate, and some of the tax havens which have a 0% tax rate. So is it actually going to make any difference if we drop our tax rate from 30 to 25% when they can still get 12% in Ireland or nothing in Bermuda or the Cayman Islands or whatever?
So just explain to me quickly, how do the Googles, the Apples, these companies we hear about all the time, how do they manage to achieve either a low or near zero rate, particularly when they're selling stuff in Australia?
Yeah, look, it's all about playing off different tax jurisdictions. What you basically want is to have your profits taxed in a low tax jurisdiction, and you want to claim all your deductions in a high tax jurisdiction. So what you typically find in the case of Australia is that these multinationals will claim, very, very large deductions related to research and development, management expenses and so on here in Australia, whilst at the same time they're siphoning off the profit into a lower tax jurisdiction somewhere else. Now in the case of Apple, that's currently Ireland. There's a proposal to bring that particular tax loophole to an end. Mm-hmm. Basically what you have there is a US registered company which is based in Ireland. By a mismatch between the American and Irish tax legislation,
right.
Actually neither the US nor Ireland regard Apple as being tax resident in either of those two countries, which means that effectively Apple is not tax resident anywhere.
So it's effectively tax stateless.
Yes, basically, which means that all those revenue flows trickle into Ireland. Well, they don't trickle in; they flood into Ireland. The Americans don't regard it as an American tax corporation. The Irish don't regard it as an Irish tax corporation. Therefore,
it's nobody's responsibility.
Nobody's paying tax. A very clever structure set up a long time ago when Apple was a lot smaller than it is now, and they've reaped the benefits from that for many years. Looks like that loophole is now being closed. Google have a much more convoluted structure, which again involves Ireland, also involves the Netherlands.
This is the double Dutch.
The double Dutch
Irish sandwich,
yes. Which you really need a postgraduate degree in tax policy to understand.
International
but nevertheless,
law.
It works.
Yes.
It's very effective.
Yes.
When you take out advertising on Google, for instance, you're not transacting with an Australian company. You're transacting with an Irish company. So again, all that revenue is flowing out to Ireland. A lot of domestic companies also have subsidiaries in tax havens. News Corporation, I think studies have found that News Corporation has the largest number of offshore tax entities of any Australian group, and they again have reaped the benefit from that. So there's all these issues around companies, not paying their fair share, and in some cases not paying anything at all. They're enjoying all the benefits of being in a an advanced economy like Australia. They have an educated workforce. They have a high-quality infrastructure. So they're reaping all the benefits of that to their business, but they're actually not contributing anything towards the further development of that infrastructure. And the argument goes that that's just not fair. And that's an argument which the government has recognised. They've been talking throughout 2014 about doing something about this. And this is not just an Australian issue, this is a worldwide issue.
Absolutely.
This is lots of governments in developed countries have got really quite irritated by this. Largely because the population of those countries have become more and more aware that this is going on. There's been this steady flow of media stories throughout the year of this company or that company apparently up to no good. And apparently up to no good quite legally. It's not like these companies are evading taxes. What they're doing is exploiting the various laws,
differentials,
jurisdictions, and they're doing this quite legally. So on the one hand, you've got this concerted international action through the G20 and the OECD to try to fix up the international tax architecture, which was originally fashioned to prevent double taxation, so to prevent companies paying tax twice, but is actually now, if anything, facilitating double non-taxation, where companies aren't paying tax at all. And then you've also got the domestic pressures to fix the system domestically, recognising that it takes a long time and it's very difficult to fix things internationally. Maybe you can do something at a national level. The UK, as we speak, has just introduced what's been called someone comically call it the Google tax.
Yes.
Which is an attempt to try to tax profits as they flow out of the UK into these tax havens. Very little detail on how that will work.
Yes.
But it got some really good headlines in the UK, and we know that the Australian Treasury has been briefed by the UK Treasury as to how that proposal might work, so maybe we'll see something similar here. But again, you've got this conflict between business. The Business Council of Australia is always saying we need to cut our corporate tax rates, but then you've got a large part of the population saying, well, hang on, actually we need to be increasing the tax burden on corporates because they're not paying enough at the moment. So you can't have your cake and eat it. Which way will the government go? Who knows? This is another question which will have to be looked at next year as part of the tax review. Because obviously if they do reduce corporate taxes, then the difference has to be made up somewhere else. Who pays the extra?
Yeah, and that's indeed a question that is quite challenging for Australian governments, no matter what political persuasion, because the tax bases of pretty much any major tax base that we've got has been whittled down quite significantly. The Henry Review was able to be pushed to the side, mainly because the mining tax was the one which the government of the day jumped on as this growing tax base, and supposedly the super cycle would never end. Well, we're now finding that with the crash of commodity prices that's potentially has been a dangerous long-term option. So mining is an issue, and indeed petrochemicals will also be an issue as the price of energy is set to fall. What are we really left with? I mean, CGT is a carve-out that's well ingrained. GST is locked to the states. Income tax is going to be really the only place that I can see that we're going to get squashed on. And indeed, we've got this massive productivity issue in Australia where workers are going to effectively be paid less in real terms. They're going to pay more in terms of a percentage of their wage.
Yeah, look, it's a time bomb. The people who potentially are going to be asked to carry the additional burden are the consumers. They're the people who are in employment. They're the people who are going to be paying more GST, potentially paying more income tax, either through bracket creep or through actual increases in the rate of income tax. The corporate tax burden is falling. Corporates are paying less taxes. That's been the case ever since the GFC. We saw when the GFC hit that the amount of corporate tax coming into Australia
globally
fell.
Yes.
And after the GFC, it didn't go back up again.
Right.
Which is interesting because the profits went back up, the tax payments by and large didn't. It's going to fall. The burden is going to fall increasingly on Australian consumers and wage earners. That has to be the fear. We can tweak the CGT system. We can tweak the superannuation system, which is pretty generously taxed at the moment. The question is, will it actually fill the void? And it's a really difficult question to answer.
How big is the Treasurer's black hole? Now, I mean, this is, you talk to some people and they go, oh, look, it doesn't exist, and compared to other countries, like, for example, Japan, which is not a good idea in my mind, right, that it's just tiny and we don't have an issue. And then there are other people, of course, you know, the current government that goes, oh, look, you know, we're about to go bankrupt, you know. Is this really an issue, or is it just a political football?
The answer to that actually is it's both. It is an issue. It's not as big an issue as the government would have us believe. I mean, there's a lot of talk about, you know, debt and deficit disaster, and there was talk about a budget emergency earlier in the year, which seems to have, that particular catchphrase seems to have died a death. It was never an issue which needed to be looked at in quite an explosive a way as the government tried to look at it. It is going to be an issue going forward. There's no doubt about that. There needs to be a look at the amount of tax that's coming in, a look at the amount of a look at the amount of spending that's going out, and there needs to be a rebalancing. It's not something that needs to be done today. It's not something that needs to be completed within 12 months or even 2 years. But as we go forward over the sort of medium term, the 5 to 10 year period, there's got to be a rebalancing. We either have to put taxes up, bring spending down, or do both. But there's a suspicion that a lot of the talk around budget emergencies and debt disasters and so on has actually been motivated more by political factors, I think. Because obviously what we've seen this year is that there's been virtually, the tax system has been largely untouched. This has been a very quiet year, 2014, in terms of tax.
Despite all the $7 co-payments?
Well, that's right.
You know,
all the talk has been about spending. It's all been about you know, cutting spending, cutting welfare, you know, introducing things like the GP co-payment. The only really sort of significant tax measure which has impacted on the sort of higher earners has been the debt levy, which expires in 3 years.
Yes.
So that kind of makes a mockery of the idea that there's a long-term, you know, disaster looming, because the one measure which could potentially have brought some genuine money in expires in 3 years. So I think a lot of the talk this year has been influenced more by politics than economics. There is an economic issue.
Is it a more long-term issue?
It is. It's a long-term issue. But obviously we can't ignore it. We need to start putting in place the steps which will fix that. And in an ideal world, this tax review next year will drive that process. But it depends to the extent to which that process is hijacked by the politics of the issue rather than the economics, and that's really the danger. That's what happened to a certain extent with the Henry Review. Some of the ideas were just too difficult politically, so they got buried. And we need to get out of that cycle. You know, potentially some difficult decisions do need to be taken on the tax side next year, and it would be really disappointing if either or both sides choose to run away from those difficult decisions.
One of the interesting ones about the Henry Review was the introduction of a flat tax, or an effectively flat tax. Do you think that could at all be back on the cards?
I think no, I don't think so, to be honest. I mean, that's an idea that which constantly sort of floats around in the ether from a certain type of tax policy academic. You know, the theory that it would, like the GST, it would be much easier to administer, much more efficient to collect, and so on. But it would also be fundamentally, I think, unfair. We're very wedded here in Australia to the notion of progressive rates of income tax. The more you earn, the more you pay, and the flat tax is kind of very, you know, it's the opposite of that, if you like. And I just don't think, given the you know, a lot of the controversy around some of the spending measures this year, which are focused very firmly on that sort of fairness and equity argument.
Absolutely.
I think the idea that a flat tax would be welcomed or would be politically saleable in this country is I just don't think it'll happen.
So flat taxes, we can put that in the cute bucket of ideas.
In the too hard bucket.
Yeah.
Right. It would impinge too hard on a lot of people, and it would benefit a certain section of society which I think is already perceived to be benefiting excessively from the tax system.
Look, Mark, thank you very much for coming on to The Forge. If there is any other further information which viewers would like to find out about, they would simply go to your website, which is...
That's right, www.taxpayer.com.au.
And I'm sure they can find out more about these issues on your podcast as well.
That's right, every Thursday afternoon you'll find a new podcast that goes onto our website. You can also download it from iTunes.
Do they have to pay for that?
It's free.
Oh, fantastic.
Absolutely.
And it's on SoundCloud as well, is that right?
It is indeed, yes.
Fantastic. Look, thank you very much for coming on to The Forge.
No problem.
Cheers.
Thanks.